get a person from those markets. Jeff Chowdhry, Head of Emerging Market Equities at F&C Investments, is joining in this morning. Good morning, Jeff. Thank you very much for joining in. Well, like you told us when you last spoke to us, tapering when it comes will not be anything as disruptive as it was when tapering was hinted in May 2013. But while emerging markets like India have coasted through December, now as the liquidity actually begins to lessen, will we see, fewer incremental flows or incremental flows not coming, falling to a trickle? Actually India has got negative FII numbers last 2 days.
I think the outlook for 2014 for emerging markets is generally better than in 2013. I think in 2013 the worry was when will tapering start and what the likely impact is. I think in 2014 it will be much less about tapering and much more about stock selection and liquidity in the various markets, and including interest rates.
But the US 10-year has crossed 3%, no impact yet on the likes of India. Will this yield rise further? Should we see some fund outflows on account of that?
My belief is that the 10-year bond yield in the US won't rise too much from current levels. I think the US economy is obviously recovering quite nicely, and inflation is under control. But I don't believe that there is enough strength in the economy for US 10-year bond yields, for example, to go to 4 or 5%. Within that background, I think emerging markets in particular look particularly attractive, simply because the valuation gap between them and the US in particular has now got to a fairly extreme level.
Okay. Jeff, hi, good morning. Now, in the first half of 2014, do you see developed market assets, rather US and Japanese assets, continue to attract a bulk of the funds? Because that's what many are expecting. Will that eventually mean outflows from emerging markets like India?
Well, I think the US at the moment, and Japan as well, is clearly at this point in time continue to attract assets, and I would expect in the next 3 to 6 months that will be the case. But what I do think that as we travel through 2014, I think more and more people will be allocating more money to emerging markets, given the fact that they went through a difficult time last year, and I don't expect a repeat of those conditions in 2014.
Just to continue that argument of asset classes, in the first half of 2014, what may be the top 3 asset classes by way of returns, if you had to do some crystal ball gazing?
Well, always difficult because there are so many asset classes out there. I think global smaller companies will continue to do very well. Liquidity environment is still very attractive. I think corporate bonds will probably do quite well as an asset class. I think again the environment for liquidity and earnings is quite strong. And I would put emerging markets up there, maybe not necessarily in the first 6 months, but certainly for 2014, I expect emerging markets to do better than Japan and the US.
Okay, that's a fairly optimistic view, Jeff. What about India? Will India receive the kind of foreign portfolio flows that it got in 2013? Anything like that?
I think India's could be a bit of a special case this year. Clearly we've got an election coming up later on this year, and I think around election time it's always very difficult to make forecasts. At this point in time, I think the important thing is the economy going to recover? One. Secondly, is the budget deficit going to improve? And thirdly, are the politicians likely to bring the deficit down? So I think there's quite a lot of different things going on in terms of India, and India could very well be a market which does very, very well in 2014, but I think a lot of it will be driven by politics this year.
The Prime Minister recently said, actually on Friday, that he won't opt for a third term to be PM. How do you see the political economy post-elections? I mean, what do you want and what do you think will happen after elections?
Okay, I mean, obviously, I don't think it's any surprise that the current Prime Minister has decided to sort of step down. I think most people believe that that is the right thing for him to do and probably the right thing for the economy. I think post-elections, I think a lot of it, the momentum which has sort of been building recently in terms of easier liquidity, I think that's going to be a key determinant. But the most important determinant as far as the economy is concerned on the medium-term basis is really what happens to the fiscal deficit. If the fiscal deficit starts to come under control and the current account deficit starts to come under control, then the Indian economy has a chance of regaining a growth rate of 6 to 7%. If the politicians don't take a grip of those two aspects, then I'm afraid we're going to have a situation where, again, India will suffer from subpar growth of below 5%.
There was a hint from the Prime Minister that the slow removal of subsidies may be stopped for now. If that happens, will you reassess entering India in the next 6 months?
Well, the removal of subsidies has been an ongoing issue for the last 20 years in India, so it's not something which is new. I mean, clearly, as investors, we would like to see subsidies removed as quickly as possible in a staged basis. I mean, obviously, we've had that so far, or last year in 2013. We'd like to see more continuation of removal of subsidies, because only once subsidies are removed do we actually have an aspect where the fiscal deficit and the current account deficit can start becoming under control. And that ultimately is the thing which is going to be positive for the Indian economy.
Jeff, do you like to buy Indian equities now? Some are buying on the hope that a BJP-led coalition will come. Are you buying? If yes, why?
Yeah, I mean, I'm not very keen on buying a particular market because of what I think might happen in terms of election. I think that's fraught with problems. First of all, you don't know whether a particular party is going to win. And secondly, if a particular party does get into power, you don't know whether they're going to actually implement the policies that they talked about. The most important thing for us as investors in the market is the economy on a sound footing? Is it likely to grow in a less inflationary environment? And inflation in India continues to be a problem at this point in time. And is the macro footing in terms of the fiscal deficit, the current account deficit, is it stable? On top of that, and that's very important for most of the markets, do we have a tax regime, for example, and a bureaucracy which allows investment and encourages investment? If all of those are in place, then I think India will attract more money. But, there's a number of hoops to jump through before that happens.
Actually, it's a cross on many of those check boxes that you point out in terms of encouraging investment. But under the circumstances, what shares would you like to buy in India now? IT and pharma stocks, classical defensives, or a definite move to buying cyclical stocks?
I think at this point in time it's a mixture. I mean, I think we still very much like the banking sector. A number of private sector banks continue to do very well. We continue to like the IT sector because both domestically but more importantly internationally the environment for IT companies is very good. Indian companies are very competitive in that particular area. Pharmaceutical companies are also companies which I think are competitive. And I'm looking for companies, private sector companies, which are well run, which have got good management, good corporate governance, and have competitive advantages. And those three sectors are areas where I think India does have good competitive advantage.
Jeff Chowdhry, we appreciate you taking time out for us this morning. Thank you very much for joining us and for injecting a dose of optimism in the market that has been falling for the past 4 days.